All right, what's going on, guys? Welcome back to the second episode. Today I've got a very special guest, Daryn.
What's up, guys?
Yep, he's in finance, and I'm excited for today's conversation. I want to learn a lot about what you do. I think the finance space, there's a lot of like negative connotations around it. Everybody hates financial advisors, and
They
everybody
hate sales.
Yeah, exactly. So yeah, let's jump in. I think this will be fun. So what exactly do you do?
I help people save money, specifically toward retirement.
Okay.
That's mainly, in a nutshell, what we do.
All right. So most of the people that come to you, what do they typically do? I mean, what does like the average client do?
Everything, all of it. We work with everybody. So I mean, typically we have people that are employed by other people that need to do some extra, building for retirement. That's the typical.
Yeah.
And then we also work with self-employed individuals, typically on the smaller scale businesses, to save for retirement.
Okay. So is it a lot of 401k or?
Yes and no. I mean, we can do all sizes, but we do a lot of like individual stuff, so traditional IRAs and things like that.
Yeah. Okay. So if a company comes, how do they come to you? What is
a company?
Yeah, or a group.
We do like Prudential and John Hancock 401k plans, so that's your bigger companies. You've got Horseman does a lot of the schools, but John Hancock, Prudential, those are the ones that do your bigger companies. We can handle those too. Okay. So I could do a company the size of Randolph Health, no issue.
Okay.
Yeah.
All right. So I guess why did you get into finance?
I didn't choose it. It chose me.
Chose you?
Yeah, it found me. And my recruiter kind of came to me and was like, I need you to interview. And then I was like, for what? Because I didn't know this job existed. So, and then I just started, taking the test just like you do in real estate or PNC insurance. And I liked it. I'm good at it. So that's where I stuck.
Yeah. All right. So you got recruited, right? And Did he come to you? So you said he reached out to you. We were talking about this the other day. He reached out to you saying like, hey, come interview.
Yeah.
For this position.
And he wanted me and my wife to interview.
Okay.
Yeah. All right. Because when you work in a commission-based field, it takes a lot of you and your spouse together kind of working toward the same goals, which is to get you successful so that you can, make it.
Yeah, for sure. So does he make money off of your production in the business? All right, and
that I completely agree with that, but yes, he does.
Yeah, I think that's like the biggest thing in most sales jobs is like everybody thinks it's like a pyramid scheme when they start looking at it like that because the more people you bring in.
Well, it is and it isn't. I mean, we're a fraternal company that works solely to do good for the community, so it's a little different in the fact that we don't work. We're not for profit. So a lot of times we're not working toward to make a bunch of money. We're working to make sure our communities are taken care of.
Yeah.
So that's a little bit of difference between us and all your other, financial advising companies like Raymond James, Edward Collins, those sort of thing.
Yeah. Okay. I get it. So like your team specifically, I guess like within the company, how many people are considered like your peers or like coworkers?
I am the youngest advisor. I'm the youngest, literally and metaphorically. I've got 1, 2, 3. There's 5. There's 5 like senior advisors, people that have been here more than 5 years around this area. We actually are one of the top producing districts in the country. We do really well. I mean, I work with 4. There's a worldwide. I don't even know what it would be called, but it's called $1 Million Roundtable, which is basically it's MDRT, and it's a scale of how high performing advisors. The worldwide they scaled that way, and I work with 3 of the 3 people that have achieved that. That's top 5% in the world, and you get measured by that every year. So I've got like one of my biggest mentors, Tanisha Carter, that I work really closely with. She's a $1 Million Roundtable earner 3 years in a row.
Yeah.
So and she's been here 8 years, and she was in dentistry for 20 years before that. So
okay. So your mentor came from dentistry and
Yep.
then got into this space. Mm-hmm. So mentorship, that's a big thing, right? So
I mean, it is in any real industry.
yeah, exactly.
But yes, it's a big thing for me.
Exactly. Yeah, I saw this thing. Iman Gaji, do you know who that is?
I do not.
He's kind of big on like social media, and he's like a philosopher almost. I don't really know how to explain him. He does
That's interesting.
like agencies, and he teaches kids like how to make a bunch of money. He says he was going over in this video about some of the greatest figures in the world, like Aristotle, Plato, Socrates, Alexander the Great, and it was kind of crazy because whenever you look at them from like, we're looking back on those people, we just think they're all like separate people. And he brought out this thing where each and every one of them were mentored by each other. Yeah. So like,
or by other people that never got any recognition. Yeah,
exactly. Yeah. And like back then, mentorship was like, that was education.
Yeah.
I feel like the school system wasn't really created for great people almost.
Yeah, I agree.
Yeah.
That's why Elon Musk didn't go past high school.
Yeah, me neither. Did you go past high school?
I did.
Yeah,
I have a bachelor's degree.
A bachelor's?
Accounting. Yeah.
Wow.
And I'm starting my master's in August.
No way. Yeah. Really?
Mm-hmm.
I didn't know that.
Yeah, a master's in economics.
Really?
My goal is a PhD in leadership from High Point University. Because I'm more of I like the mentorship and I like the leadership. And I don't think leadership and management are the same thing, but I want to learn and dive into leadership and how that really works and how it works for people around me, because that's what I'd really like to do. I don't necessarily want to be a nobody financial advisor for the rest of my life,
Yeah, I get it. I had no idea. So where did you get your bachelor's degree?
Wilmington.
Really?
Yep.
When did you, what?
I graduated in 21.
Oh, okay.
Yep.
I got you. Wait, you're 22 right now?
Mm-hmm.
All right. So 21. When did you graduate high school?
In 19.
Okay.
I came out of high school with a 2-year degree.
The dual enrollment thing?
I was the first one in the county to graduate out of a traditional high school and RCC.
Okay, yeah, I did dual enrollment, but I went to GTCC.
Because you're from Guilford County.
Yeah, because I'm from Guilford County. But, gosh, I hated that. Like, that was
I
like
did
the
not.
worst thing.
I tell people all the time, and this is, again, the leadership side of me, but I would go to school full time for the rest of my life if somebody paid me 6 figures to do it.
Really?
Yes.
Gosh, why don't you just join the military? They'll pay you to go to school.
Well, I probably would have if my wife would let me.
Yeah? Mm-hmm. Wow, that's crazy, man. So you love school?
Yeah, I
really?
do.
Well, I
love learning. So I think that's another reason this career is, for me, is because it's constantly changing. Just like the reason accounting wasn't for me, I worked for a public accounting firm for 4 months, and I sat behind a desk and worked on spreadsheets all day.
Yeah.
And that part's not for me.
Yeah.
But the learning, and accounting is a lot of learning every year. Mm-hmm. If your accountant, CPA is not staying up to date, then they're not good for you.
Yeah.
And I think that's why this career really stuck with me, is because I stuck with it, is because you have to learn. And you learn about different people all day long.
Yeah.
So.
Yeah. Okay. So and when you're in school, do you work when you're in school? Did you what did you do while you were in college?
I worked retail for 7 years, shoe show. I traveled for them some, worked here some, worked everywhere all across the state for a shoe show. I also worked at the Y as a after school care down in Wilmington. So that was my job down there. And then I drove here on the weekends to work. Met my wife 2 weeks before I went to school. So that was, I wouldn't say it was a damper. It was probably saved me from a lot of trouble in college. But meeting her, pushed me to come back every weekend. So I was here every weekend. And then, COVID hit in March of my first year at Wilmington. So I didn't ever go back. I finished on.
Okay.
Yep.
Wow, that's crazy. I feel like you've done a lot for your age. Most people are just graduated college like a couple months ago. And
people I graduated with are still in the bachelor's program. So most of them are. They went to college.
And they didn't. A lot of them aren't working. If they are, it's like a coffee shop or something, right?
No. So, I was actually traveling like a district manager for Shoe Show throughout college. Actually, and then in high school, because they needed the help, and I liked that job. I would probably do that job still if they would pay me 6 figures to do it, but they won't. Because I really liked being around people. I've got OCD problems, so I like the organization of the store and making sure things ran the way that I wanted them to, and I could run everywhere that I went. It was the way I wanted it to go. So.
Yeah, I got you. So you are whenever you talk about like if they'll pay you six figures, are you just comfortable there, or are you wanting to?
No, and that's why this job is for me because there's no cap on what I can make and do.
Yeah.
Especially like I came into a really really crazy time for finances in general across the country. We're in the largest wealth transfer in the history of the United States right now. Right now, baby boomers are dying, and it's the largest wealth transfer ever in history.
Yeah.
Perfect for financial advisors to be involved in. I mean, I would say it's perfect for real estate agents to be involved in too, but and then also estate lawyers and there's a lot of moving parts to this wealth transfer that's happening. The problem with being involved in it in any other sector but mine is that eventually people are not going to be able to afford the other stuff, but they still got to have a financial advisor to tell them what to do with the money they do have.
Yeah.
So
let's just say I came to you and I was like, hey, I have like $500,000 in my savings account, and I just hold cash. Cause
you wouldn't be the first person.
I'm an ignorant, I have no idea what to do with my money. What are you going to tell me to do?
How old are you?
Let's just say I'm 30 years old. I have 2 kids, a wife. I do not own property. And
so you rent?
I rent, yeah.
I would probably throw $100,000 of it in something fixed for your future, because right now fixed rates are higher than we've ever seen them.
Yeah.
Because all rates are higher than we've ever seen them.
Yeah.
Well, within reason. Then I would probably tell you need $300,000 of it in the market and a non-qualified, because you need to be buying a house for those 2 kids and wife. So non-qualified basically lets you put money in the market and then you just pay capital gains tax on any growth. That's how non-qualified works. I'm not putting it in a Roth. I'm not putting it in you could put it in a Roth. Because a Roth IRA is, you can get money from it tax-free, penalty-free after 59.5, but you can actually get to your principal in a Roth IRA at any time, the money you've put in. So, you could put it in a Roth, but I'd say if you would have to tell me your goals. So when I have a client come to me with any money, I've got to sit down and find out everything about them, because I'm a Series 7 licensed representative. I have a fiduciary duty to make sure that I do what's best for you, and I can't do that without knowing everything.
Yeah.
But I would, essentially that money needs to go somewhere other than a savings account.
So this, like a fixed account, you said put $300,000 into it. $100,000 into it. I understand, your interest that you can earn on that is higher than most other things right now, and it's a lot safer. But
so much safer.
Yeah, but like, why? Let's just say like I had that much money, but my goal isn't necessarily like security. My goal is, hey, I want to double it. Like I have like $500,000. I want to double it. Why wouldn't I put that into real estate?
In real estate?
Yeah.
You can. I just don't know that you'll double your investment in real estate. Real estate's hard to picture or hard to historically track. It doesn't work like the stock market does. And so 40 years from now, you're not going to know what that looks like. So if you're 30 years old, not even 40, you have 30 years. You're 33 years old, you got 35 years or 34 years until you're 67, ready to take Social Security, ready to retire, yada, yada, yada. I have a problem with people throwing all of it into real estate, because what if the market's down at 67 and you need that money because your wife's in assisted living and now you've got no money left in your savings account and you've got to have something to keep her up in assisted living because it's $10,000 a month. What do you do when the market's down and you've got to sell it for half because you have no other choice? Yeah,
so no matter what, some of that has to be in the market.
It doesn't have to go in fixed and safe and guaranteed. If you're completely 100% speculative, you want everything to be in crazy growth stuff or high potential, high risk, high return stuff, that's fine. I just probably would advise you not to be 100% high risk, high return.
Yeah.
But a lot of times that's not all people have, and that's why you gotta do your fact finding. You gotta make sure you know everything about the person, and that's, I mean, sometimes it can be unfortunate because some people don't want to give up everything that they know everything about you. You know what I'm saying?
Yeah, of course. So if with like this type of stuff, with finance, with going to a financial advisor, most people that work with you, what do they do? I mean, obviously it's like very broad, but like what does like the typical client look like? You know, what's their income?
60 to 100.
60 to 100? Are they
Which was
middle-aged?
comfortable 5 years ago.
Yeah,
you know?
not so much anymore.
Yeah. No, I work with people our age, 20 to 25, and then most of mine are 50 and up.
Okay.
And then I have like kid clients that are clients of, or their kids or grandkids of my clients, but
Yeah.
Typically mine are the 20 and 25, and then 50 and above.
Yeah. What's like the worst situation you've seen? As far
Well,
like
let me tell you the worst client category. I can't. It's not that I can't stand, but 30s and 40s are the hardest I've seen to work with because they feel like they've got it all figured out. They feel like, I'm 22 years old and they're 30s and 40s, and they feel like they know everything. They're the hardest I've seen to get because I am in sales. I have to sell myself and
of course.
The value I bring. They're the hardest to sell. The worst client I've seen, we met with a girl. She's not a client because she had literally a negative income. Like her cash flow was negative every month. And, but I met with her, we did our fact finding, we found out how much she made, what her bills looked like.
Yeah.
She had literally a negative cash flow every month. And so we couldn't do I can't do anything with somebody that doesn't have any money.
Yeah.
They have to have money to work with me.
Yeah. Well, what do you tell them?
Like, well, for her it was, okay, you got to figure out something, like you got to work another job or a better job or something. Like, it's literally a matter of controlling human behavior. That's what we do. Yeah. Is change or control or manipulate human behavior so that it works for them a little bit. She had like $1,400 of bills making $1,100 a month, and it was like, we told her, it's like, you need another job or you need a better job. Or,
what was she doing?
She was working at a vape store.
Oh, okay.
Yeah. So, she's...
Come on.
Yeah. She's, 23 years old. She's been dealt a rough hand, though. So it's like, you can't blame her for, working wherever she can find.
Mm-hmm. Yeah, well, everybody is dealt a different hand. It just depends on how you play it, right?
Yeah.
Best poker players, they're not.
I don't play poker, but
me neither. Yeah, I get the idea.
I don't even know how to play it.
Me neither. Yeah, I sit down with like my. I go on vacation in the Keys, and it'll be like my dad's side of the family, and they're all. Most of them live in Miami, and they like half of them are like Cuban. I'm not Cuban, like in-laws and stuff. And they play poker, and every time I'm just like, I'm not gonna put money in this.
I'm gonna have a Jack and Coke and sit here and watch you play.
Yeah, exactly, exactly. So, all right, you talked a lot. Oh, not a lot because I still don't understand it. But your whole life product that you guys offer, I want to understand it. What is this all about?
So we have our Mac Daddy. I'm just going to pull it up and show you, and obviously they're not going to be able to see, but you'll get an understanding. Mm-hmm. This is our Mac Daddy, or our Buick, life insurance product, and the reason it is because it's got a 4% attached interest rate to the cash value.
What does that mean?
That means that forever, when you start the whole life right now, forever, the cash value in it's going to grow at 4% forever. And so when the market's really down, you still are earning 4% on the cash value within that life insurance policy. So when you pay for whole life insurance, some of the money, the premiums that you pay go into a general account, which is basically is the cash value in it. And eventually you buy more paid up additions of insurance, but you've also got the cash in there. And this is, if you watch TikTok or some of your finance people online, they're saying, a lot of people are talking about IULs, which I don't do the index ULs. I can, but I don't like them. The problem with ULs, universal life, is you get to be it's a term insurance attached to a like growth account.
Yeah.
You get to be 65, 70 years old, and it costs you
way more
to keep the life insurance up. And in that stage of life, people are concerned about how much life insurance they have.
Yeah.
I can't stand that stuff. So I do fixed products for life insurance, because life insurance for us and for anybody that has any sense in their head is the foundation of a sound financial plan. So I don't like the index stuff on life insurance. But let me hang on. But the whole life it's expensive, but it's if we say, okay, we've got to kill two birds with one stone. You've got a cash value that's fixed and a life insurance tied in this. So when you sit down with somebody, they don't have any life insurance, they don't have any fixed stuff, they don't have anything. I start with this, which is their life insurance and their fixed cash investment account, if you will, and then we move on to the market.
Yeah,
that makes sense.
So explain cash value. Can I pull money out of this?
Yeah, so what I was saying about TikTok and some of your mainstream people, they're saying to be your own bank.
Infinite banking, right?
Yes. It's saying, and I'm not sure because I didn't look it up like you told me to, but I'm not sure. I've never heard that term, but be your own bank is something that's been come up a lot recently, and this is how people are doing it. They are creating pots of money that are tax free, and using that to fund all their other stuff. So if you talk about real estate and how you want to be a real estate investor, I've got one of these started that hopefully I can pull 20 grand out of in 20 years to to fund something like that. How much
can I put into it? Because I guess we're talking about like the death. Are we pulling money out of the death benefit?
No, out of the cash.
Out
and
of the
actually,
cash
this
value?
one, the way that this works is that you take a loan from it, so that you're literally your own bank.
And you pay yourself,
and then you pay yourself back with an 8% interest rate attached. So instead of paying the bank, you pay yourself back.
What if I don't pay myself?
Then the death benefit goes down, and
they take it out of the death benefit.
Yeah, so I can show you. This is just an easy illustration. It's a 20-year paid-up whole life $50,000 death benefit initially, $62 a month, and then if we go down here to, that's too far. If we go down here to age 50, you want to buy a property at age 50, you've got $22,000 in it, you've put 14 in it, so. And you've got death benefit. So you're paying for a little insurance. That's why it doesn't grow extremely fast. But I can actually add, if you wanted to add $40 more into this every month.
Yeah, let's see. Because there's a lot of guys that I see. I was listening to, I don't know if you know who it is, but Ryan Pineda. He's a big real estate guy, and he had somebody on. I mean, I feel like this was like yesterday I listened to it, but he had somebody on that was talking about how he uses a whole life product like this to be his own bank and fund all of his deals. Yeah. But I'm trying to figure out how he's able to drive up the sum of cash value to the point where he can pull out of it and invest into something. Yeah. So this, it's the same principle. So here at age 30, you've got. Well, that's not a good example. Let's go here. Age 40, you've got $26,000 in it. I only put $40 extra in it over what the cost is for you. So what if I do $400?
So there is what's called a MEC, which is a modified endowment contract. When you start to fund life insurance too much, they actually take away the tax-free whatever privilege that you get with life insurance.
What is too much?
So this is saying this certificate becomes a modified endowment. Basically, the IRS says that life insurance, cash value in the life insurance, and the death benefit have to make sense. Like you can't have $150,000 worth of cash value and only $100,000 of insurance. Yeah, does that make sense? So that's why it's saying, like, this one says it becomes a MEC and you're 14. All that ours does is just increase the death benefit to make it stay within the parameters that the IRS gives us. And it does that automatically. You don't make any changes. But I put 40 extra dollars a month in it, and the cash value at age 50, which is what we were looking at earlier, has almost doubled. So I mean, you can dump. We could probably dump. You would just have to go up with the death benefit a little bit. So let's go right here. And I did one of these for it's a $200,000 whole life, but he's putting like $600 a month in it. I can't remember exactly what the cash value looks like for him. But yeah, I put $400. You put $400 in this thing every month. So here at age 45, it's worth $154,000. You put $100 in it.
So, sorry, if I have like $20,000, can I put that into one of these?
Yeah, we can do a single premium. Let's leave this the same. Let's see what it does. So yeah, $20,000 into one of these actually buys $250,000 of death benefits. So that's where they just have to make sense. And so here, when you get done paying for it, it's worth $70,000. So you've essentially got about $22,000 worth of growth out of it, and then you've got $70,000 to pull from as your loan, or however you want to do that. Basically, I can structure it to be anything, right? I can structure it to be any kind of premium every month, any investment into it. The thing that I would say is you would take this out as your down payment on a house, right? It wouldn't be like you got $400,000 in there to go buy a property to rent. But you take it out, you charge the rent to pay the mortgage, but you charge a little more, so you start putting that money from that back into this, right? And then you take this and fund another one. Yeah, that's how people make it work for them. And so, I mean, it is super cool how they work. It's really cool that there's an 8% attached to it that you get to pay yourself back. Yeah. That's what's probably better than anything else.
Yeah, because if you go to the bank and get that same loan from the bank, you're paying them that interest. So, I mean, that makes perfect sense. Yeah. It's just kind of, I think that's very difficult for some people to wrap their head around.
I can even show you, let's see. I want to add one. If I do actually, I'm going to be honest with you. I was going to show, I can show some of that stuff, but I would have to play with it a little more because I haven't. But I can show, like, say you take a loan out of it at 50 for $20,000 and then show paying it back and what it would be worth in 5 years and stuff like that. I can do all of those, illustrations. I would just have to play with it a little bit to kind of figure out.
So do you have these products yourself?
Yeah, I do. Yeah. I have the $50,000 paid up in 20 years. So for me, and I can show you what that looks like. I just did it.
A lot of advisors don't even have the own product that they push and stuff.
No, this one is. I mean, it's like no other. And I work. I just see too much of people in my industry that do things for people that make no sense. And then we have to come behind them and try to fix it, and then we can't fix it, and then it's a problem.
So, commission wise, do you make more money on one of these or on a regular whole life product?
This is my straight whole life. This is my standard. This is what we do. Like, if somebody wants whole life, this is the product we use.
Okay. What about as far as like dollar to dollar? If
I make 50% of the first year premiums, because with my company I have a pension, and so most companies pay 90 or 100% first year premiums on life insurance. We pay 50 because 40% above that goes into my pension. I don't pay into it, and so I take a little less money, but I have a pension that I can, if I make, say I make $2 million, and this is just a crazy number because it's not, I don't know what it'll look like in 40 years, but say at 60, 61, 62 years old, I make $2 million both of those years. That's what I'll make when I start taking my pension for the rest of my life.
Yeah.
I'll make $2 million. And so that to me is worth a little bit more than making 40% more on the commission right now, because I need help saving just like everybody else does.
Yeah.
And so it's a great way for me to, still make money, but also have a huge pot in retirement to pull from. So, go ahead.
Are you gonna get into real estate stuff? Are you going to do any real estate investing?
Yeah. So my whole life that I have right now, I'm pouring $40 extra a month into it. I will have about $40,000 at 45 years old in it. That's where I'll pull for something eventually. But I'm planning
at 45.
I'm planning to start now. So I've got we are breaking ground next month on a 2-car garage with an above apartment. My goal and my hopes, it's on 10 acres, is to break ground, live in it 2 years, avoid capital gains tax, and then rent it out, and then move on to my next one. And I want to do that every 2 years for the next 8 to 10, and have 5 properties by the time I'm 33 years old. That's how I plan to get into real estate.
Yeah.
But I'm not doing the flip and sell thing. I'm doing the income stream thing. That makes sense?
Yeah.
And I think with the growth that we're about to experience around here, and the zoo, and the way the zoo's growing, and it's state funded now, I think it would be a great time for us to have some Airbnbs and stuff around this area that we don't currently have.
Yeah.
And I've actually heard people in other parts of this state tell me that that's something that this area needs. So I'm going to take advantage of that really soon.
Yeah, it does. You have some land, right?
I have, yes.
Okay. And you're going to build it on that land? So, because I've been thinking about and trying to figure out how to do that same thing, where like buying the land and building, the
land was given to me. So sometimes you have people have upfront, capital a lot of times, or they have people that give them something. Mine's going to be the land. So I'll have to get the loan for the house, some of it. But the land was given to me, and my goal with this first one is actually that's going to be where we build our permanent home eventually. But I've got to, make my way around town with a bunch of other houses before I get there. Yeah.
Yeah, I've been looking at doing that similar thing, like, maybe 2 acres or something.
Yeah.
Laying the slab, putting the garage with an apartment on top.
Yeah.
And then over the course of a couple years, just building something in cash. Just like paying for the foundation, paying for the septic, stuff like that. But you're using a specific builder?
I don't have. I'm going to be the general contractor on it because that's how you save money. But I probably will use Tim Sharon as my builder just because I know him, and my uncle Chris Davis and him are investors together.
Okay, I got you. Yeah, I think that's a really good idea right now, at least. If you can find a builder to do it, because I know most builders are really only doing like 3 2s instead of like a 2-1 because it's so much cheaper for them to add that on, but it adds so much value to what they can sell it for.
Yeah, and this is not for the builder to make money on. It's for, my residents. So you're right, I do have to find somebody that's got the time and the will to do something that they might not make a whole lot of money on.
Yeah. Yeah, I wish, what I wish I could do is I wish I could just build it myself. I wish I had the time and like the cash to just build it.
I'm not hands-on. I don't do.
Me neither, but there's YouTube, man. Everything is learned on YouTube.
I don't. Like, I hate YouTube.
Really?
Yeah, I'm not a YouTube person.
That's like our biggest difference, because you like school. I hate school, but I love education, and like YouTube is where I learn everything.
Yeah.
Okay, I get it. So I think kind of from what I understand is somebody that has money and is wanting to do something with it. If they don't have the time, they're working all the time, they don't know anything about real estate, and they don't want to put the time into learning about real estate.
Yeah.
Working with a financial advisor probably makes the most sense.
Yeah.
Right.
Yeah.
But if they're really serious, this is my opinion. You can tell me what you think. You can disagree if you want. But in my opinion, if they're really serious about like fast growth, to learn about real estate, to make some flips happen, because you can say you can get a $150,000 property, put $50,000 into it, make $250,000, or sell it for $250,000. There's a $50,000 growth in 3 months, and then of course you have taxes, which you can't do that. Because like to me, whenever I'm trying to think on how to say it, but like whatever I don't have control over, I feel like has the most risk in my life. So whenever I can control something, I have less risk. So like if I put all of my money into the market, like into a IRA or something like that, I don't control. Like I like the idea of like a self-directed IRA.
Yeah.
But at the same time, I feel like most people don't want to put the time into learning about it. What are they going to do with the money?
Well, and that's why you work with a Series 7 rep, because I can be the discretionary authority for you, and then you can have that self-directed Roth IRA, but I can make those calls and those decisions based on what I think is going to be best, and you don't have to worry about that. I'm the only one that I work with that is Series 7 licensed, so nobody else that I work with can make those calls and those decisions for you.
What do you typically invest in? Because you have
mutual
like REITs
funds
and mutual funds and stuff.
Mutual funds.
Just mutual funds.
I'm a year and a half into it. I'm not doing individual stocks for people. I'm not going to, because I think it's stupid. Mutual funds the reason I like them is because you've got 150 companies within one fund. One goes down, the other one goes up. You're kind of even, right? And so, I mean, over the course of 40 years, they've got 12, 14, 15% average, annual returns. So, to me, like, why take the risk when you can see? I can illustrate for you $5,000 40 years ago what it would be worth today. It's like worth $1 million. One time contribution of $5,000. And so to me, like, why not? But I'm also not all my money in one place either. So if you have $500,000, sure, go buy a house property for $250,000, but you need to put some of it away to
definitely
safeguard or
kind of hedge your bets.
Yeah.
Well, because like my concern with it is like I see a lot of people that had, because from what I understand, like a 401k was kind of created to get rid of the pension plan, like replace that, so the companies can also make money on that. And that's why they match it, because they're incentivized to match a 401k
because they get payroll deductions.
Exactly. So a 401k I think is hit or miss. Like if you're not going to do it, if you're not doing anything with your money, at least do the company match, right? Like at least do the company match.
I would say that anyways, but yes.
And then because
you can live without 3% of your paycheck.
Yeah, exactly. You don't even see that. I mean, a big chunk of it gets taxed anyways.
Yeah. That doesn't, though.
Yeah, that doesn't.
That 3% doesn't. So you're actually only taxed on 97% of your income instead of 100. But you pay taxes on it later.
Yeah. So. But what do you think about, if you think about it, like you could go into like a REIT, like a real estate investment, I forget what it stands for, honestly.
Real estate investment trust.
Yeah, real estate investment trust.
Yeah.
Because like I don't know anything about real estate. Great, I can just throw money into one of those and let somebody with the brain power do that real estate investment.
And I think it's a great idea if you're a wealthy investor, because there's a lot of risk in it. Yeah. I don't think $500,000 is wealthy.
Yeah, of course.
So you got to kind of, lay out what you got. Like that's what I'm saying. You can't just come to me and say, I've got $500,000. What do I do with it? I got to know how much you're making every year. How much of this money do you need to stay liquid and be there? How much of this capital do we need to preserve in case you have something come up next year? So I mean, it's hard to make those decisions based on blanket statements. Yeah, you got to be wealthy to invest in real estate investment trusts.
Yeah, of course. Well, if it's kind of off topic, but you're talking about being liquid in real estate, it takes a long time to get that money. Yeah, like if real estate is like okay, I have money and
I have an extra $1 million
right? Yeah.
just laying around, then I would do real estate.
Yeah. Product like you were just showing me your whole life, that's like, I can go to that. How quick do I get money back?
You start gaining cash value in the third year. So it's not the most liquid thing that I would say, but it's only $150 a month opposed to, 20. If you're investing $20,000, I would probably still put it in the market.
What is liquid? Like what can I put into that if I need money, in the next 2 weeks? What can I get my money back?
A non-qualified Roth IRA.
Yeah.
All those anything that when you put money in the market, you can buy today, sell tomorrow.
Yeah. So like having an emergency fund, having some savings, expenses covered, spending, and then having kind of like that cushion in an account like that to where if something bad does happen, okay, great, listen, I'm just going to go to this account, pull it out, and then take care of it. And that can kind of benefit and like hedge some of the risk in real estate too, right? Yep. Because if my HVAC goes out,
you got some money somewhere.
Yeah, I can find that money without having to pay a bank a loan or something. Yeah. And I can pay myself that interest if it's something like that. Yeah.
And that's why you start when you're 20, 21 years old, because in your 30s you'll have 50,000 here, 50,000 there to work with. Yeah. You're not just left taking out a bunch of loans to fix stuff all the time.
Well, how do you feel? Because like obviously inflation the last little bit has been really intense. Yeah. Like my, not necessarily my grandmother, but you'll see a lot of older people, they put their money into X, Y, and Z. 30 years ago, they're like, okay, I'm going to have enough to retire by then. And now 30 years comes by and that money is not worth the same because the growth wasn't fast enough. I feel like that's kind of a risk, right? Like, what if, like, how do you deal with planning with, like, for somebody to make sure they have enough, even with the idea of inflation?
Well, inflation right now is crazy.
Yeah.
Generally, it's a 1% to 3% growth every year. You're seeing more than that in the market on average. So that's how you hedge against inflation. Is the market.
Yeah, I feel like I want to be safer though. Like I want to be more safe, which is why I like real estate. Like, because with inflation, like real estate is following inflation the whole time. Like that's why we saw this massive growth. So if 10 years ago, let's just say, I mean, even in 2008, if we were to buy a bunch of property then, even with that downturn of the market, like so many people became multimillionaires at that time because they got in. And then now, like the real estate boom, that followed inflation. People said, okay, their government's printing a whole bunch of money. What's the one thing that's going to follow that the whole time? Yeah. Let's throw it into real estate and sell it when it's done. And my cash just grew at the same rate that the government was printing money. Yeah. That's why I like real estate. Yeah,
and I don't disagree. You heard me. I'm gonna do real estate.
Yeah, of course, I get it. Well, all right. I mean, I think, how long are we at right now? I mean, this might be good. You want to keep going, or you got anything else?
I don't know. I've said everything I have.
Yeah. I think I learned a lot. I feel like the finance space is just something that nobody really understands.
And I think a lot of people think they have to pay a bunch of money to have these conversations.
Yeah,
right?
Exactly.
We don't charge, I don't charge any fees though.
Yeah.
So like to have conversations, I've helped people and not made a dime off of it.
Like a free consultation type of thing.
Yeah.
Yeah, I mean, you don't learn this stuff in school. Like school does not teach you about money. They teach you I know you like school, man. I get it, but you had to go elsewhere to learn about this stuff. Yeah. I mean, in school, at GTCC, I took like micro and macroeconomics. My professor was this. Nothing against Indian people. I love Indians, but he didn't speak any English, like hardly at all. And
mine was from Africa. So
yeah,
my economics professor.
How did he get? because like I couldn't learn anything really. I mean, I remember a lot of people in the class were just like not the happiest because they
I liked economics and I liked her. She was really smart, but I just like would love to sit down with her and learn about how she got over here and got into economics.
Yeah, it's a crazy thing.
United States economics. Well, it all. I mean, it's all tied together, but
yeah.
She teaches economics in the United States now, you know?
Yeah.
And it's a little different.
That's pretty cool, though.
Yeah, it is.
Yeah. Like, the idea of somebody coming from another country on the other side of the world coming to
teaching United States students about economics.
In North Carolina.
Yeah.
Like, that's the most random thing ever. But, hey, that's the American dream, I guess.
Yeah.
All right. I don't think I have anything else. Nice talking with you.
Yeah.
Yeah, let's do it again. Maybe next time I'll have like a studio.
Yeah.
All right. Yeah. Cool.
You can always rent the Kit House downtown if you wanted a studio.
I can do what?
There's a place downtown that's like you can rent if you ever like get to that place. It's called the Kit House, and it's just like a kind of like a place you can use for like photographers can rent it. Like it's pretty. I mean it's neat. It's kind of weird.
Have you been?
No.
No, me neither.
It's right beside OG's. Yep.
I don't know.
Yep.
Where is OG's?
Oh my gosh. I forget that you haven't lived here in like, 10 years. OG's is downtown too. Like right down the street.
Oh, yeah. I don't know.
Sunset, where everything happens in Asheboro.
Yeah, I get it.
Like our one busy street.
Yeah, I know that road. Yeah, I'm from Greensboro, so Asheboro is still kind of new to me. Like a year new to me because I left Greensboro, moved to Miami, and then came back here.
I forget that.
Yeah. All right. Thanks for listening. If you made it this far, congratulations. I hope you learned something. Let me know down in the comments on if there's really anything that you want me to talk about or anybody.
Questions.
Yeah.
Any questions you have.
Yeah, if you have any,
if
you have any questions about finance, hit him up.
Yeah.
I'll put your information in the description. Darren's a cool dude. He can help a lot. Yeah. All right. Sounds good.